Hello, everyone. This is Doug Campbell-John, and welcome to this week's episode of Revenue Renegades. This week, I am pleased to invite to the show Sam Jacobs, the founder and CEO of Pavilion, a best-selling author of the book Kind Folks Finish First, co-host of Top Line Podcast, and a relatively new father as well. Welcome to the show, Sam.
Thank you, Doug. I'm excited to be here.
So, we could talk about living in Barcelona, all kinds of fun stuff. But why don't we start with what is Pavilion and what's the founding story of the company?
Pavilion is the largest and I hope best community for go-to-market executives at high-growth companies in the world. So we are a membership organization with 10,000 people distributed globally, and we are chapter-based. So we have chapters in San Francisco, London, New York, et cetera. And our mission is to help build the modern go-to-market executive. And what we mean by that is, the world today is incredibly uncertain, as we all know. It changes by the minute, by the day. I'm sure we'll talk about some of those changes. And so the reality is nobody's been a CRO or a CMO in 2026 or 2027. Everybody, even, you with all of your experience, me with all my experience, everybody is new to this, given everything that's changing. And so Pavilion exists to provide education, to provide community, to provide in-person experiences, all of which are designed to help people, navigate this world with confidence and help build great companies. So, that's a long-winded way of saying, it's a membership organization. People pay dues, and we try to help them have good careers. The origin of this is we're 9 years old, and next year's our 10-year anniversary, and we're planning a bunch of stuff about that. But the basic idea is I was a CRO at early stage high growth companies from 2003 to 2018. And as I became more senior, my job became less secure and less certain. And there didn't seem to me to be an organization that really wasn't for founders or investors, but that really celebrated the operator, the CRO and the CMO. And we really needed it because our average tenure kept shrinking. So, we popularized this stat that the average tenure for a CRO is just 18 months. I actually did some analysis on my LinkedIn connections recently. It looks like on average, the people that are sales and marketing executives that follow me have been in their role just 13 months.
Wow.
So that tenure seems to be shrinking. And there needs to be some kind of organization or association that equips people to deal with this new world. And that's the purpose of Pavilion. So we are specifically for CMOs, CROs, CCOs, heads of RevOps, people in the go-to-market function.
So let's talk about the tenure is a fascinating stat. What do you think is the cause of that? Is that a failure of leadership, company culture, or just kind of like the nature of the startup and SaaS model?
I mean, I think the number one contributor is the macro environment. I don't think it's a failure of leadership per se. I just think the nature of how we all build companies, particularly in a remote world, particularly with a global workforce, and particularly when things are changing this rapidly. I used to think there were more, the origin and the founding story of Pavilion was a little bit more us versus them. And I would say that, the real problem is inexperienced founders and CEOs and quick to fire investors. And I think that's still a big driver of it, but I don't think we can ignore the reality that things are changing so rapidly, and people have side gigs and are fractionals and are consultants and are also in-seat full-time operators and also are founders themselves. I just don't think that there's a traditional career playbook anymore, and that's part of why we exist. So I would say, there's a healthy dose of CEOs and founders being too quick to fire and not wanting to invest and develop executives. But I also think the degree of execution, the bar is higher than it's ever been in terms of what it takes to execute in this particular environment. And so I don't necessarily think there's like a villain per se, but I think the villain is a lack of education and a lack of development around the go-to-market function. And that's why we exist.
Got it. So I've read you've come up with this bill of rights for GTM executives. Did I get
I
that right?
have.
Can
You
you tell
do.
me a little bit about what that's all about?
Sure, of course. I mean, again, like part of Pavilion is we want to teach you unit economics and we want to teach you who are the best AI SDRs. But honestly, part of why we exist is to help empower the specific individual. So, and that's because, for a very long time before we existed, I'm not saying we're the only reason that things have changed, but I do think we've played a major role. is all of the cards were held by CEOs and investors. Cards in terms of how to understand equity, how to understand preferences, how to negotiate for compensation. And so the reality and the result of that was that executives and specifically CROs and VPs of sales would spend all their time negotiating for cash comp, but really wouldn't understand how to structure their equity in a meaningful way to increase the likelihood that something good would happen. So there are 5 key rights in the Bill of Rights, and they're, we use the word right euphemistically. This is not like the right to free speech. This is somewhat, we live in an at-will employment world where people can negotiate. So, but this is a negotiating framework first and foremost. So the first is the right to due diligence, right? If you're going to be a C-suite executive, you have a right to understand how the company's doing. And every founder wants to sell you a dream. And if you're a CRO and CMO, that's okay. This is a high risk, high reward kind of deal, but we do have a right to understand how the company's performing. What's the capital structure? It doesn't mean you need to see the cap table, but you should understand, did we raise at 80 million post and on 2 million in ARR and we're under, 3x liquidation preferences. So there's a right to have the right information so that you can make a good decision about whether or not you want to work with somebody. So that's right number one. The second is the right to align comp. So somewhat controversial, but I don't think CROs should be paid like account executives. So I don't think CROs should have 50-50 comp, 250 base, 250 OTE, 500 all in. I think you pay someone like an account executive, they're going to act like an account executive. And yes, I want to hit the number for the quarter and for the month, but I also want to build the machine so that it can deliver in the quarters of 2 years and 3 years from now. And to do that, I need a longer term focus. So that just means probably 2/3 base, 1/3 bonus, probably similar to how the rest of the ELT is paid. Third right is the right to liquidity. This doesn't mean literally the right to liquidity, but it does mean the right to negotiate. And we try to educate people on terms that will increase the chances of liquidity. There's a lot of special terms that we could talk about, but the number one thing I would suggest, which is very, at this point, non-controversial, but if you just get an extended period to exercise your options when they convert from ISOs to NSOs, you can totally change your life. And in both instances, in previous companies that I had, not having that right really screwed me. Fourth right is the right to severance. We can talk about that. And then the fifth right is the right to consult, to the point of if we're going to get fired all the time, then people should have a right to have a few side hustles where they're monetizing their non-competitive expertise. Those are the rights.
I love those. I mean, I'm a huge fan of the exercise period thing. We have a 10-year exercise period in all
There you
my
go.
companies, right? So just
And I think that's probably too generous. So, maybe over the years I've gotten crustier
yeah,
and,
yeah.
grumpy in my old age, but we give 2 years at Pavilion.
Yeah, my feeling is just like, especially with the kind of path to liquidity often stretching out,
Yes.
certainly to kind of an M&A or an IPO event. We want to make it a non-issue. My feeling is like if somebody has made it past a year, contributed to the company, and you know should get some value from that. The flip side of that is I think I've been traditionally very strict about, we bring folks in and we have a 90-day meeting. The first day we tell you there's going to be a meeting on your calendar 90 days out, and we're going to sit down and see, is this working for both of us?
I love
Because
that.
I find like if you don't have that forcing function, it might be 6 months, 9 months, a year, and suddenly somebody's been kind of a B player in a role for a year plus, they've vested, and they're like, eh. And
I
then
think I strongly agree with that. And the other thing I might agree with, so it's funny because, I'm sitting here and I am a CEO now. So things have changed a little bit, but I do still want to advocate for the operating executive, and I do. But I think, 25, 25, 25, 25 vesting might also be something that we could take a look at. So, because I agree with you, if they contributed in the early parts of the organization and they've been there a year, fair enough, they should definitely participate. But I don't know if a C-suite executive that didn't work out should get 25% of 1% 9 years later when we've all been busting our humps for 9 years and they haven't been in the organization. I think there's creativity, but fundamentally, I think that there's an opportunity to redistribute a little bit on the margin how the employees participate in the upside of the organization.
what do you recommend for a vesting schedule?
Well, I believe in a 1-year cliff, and I love your 90-day meeting. And I just think, first of all, I mean, I'm not that creative on the vesting schedule. It's probably just backload the percent of the option grant on a 4-year grant. But to the point, the real thing I think is that you shouldn't be forced to make a decision 90 days after you left something, perhaps on not great terms. And I think you should just have the opportunity, which is, I've asked for it. And the funny story is, I'm the George Costanza of exercising your equity, because The first time I exercised, because I've been at a company 5 years, and you make these irrational decisions about, I just don't want to see it go. I don't want to see it get acquired, and I wasn't there to participate. And right after I exercised, there was a down round, and the total equity value was wiped out. So strike one. So then the next time I chose not to exercise. I chose to leave a company after 2.5 years, and I said, you know what? I'm leaving. I'm going to vote with my feet. If I don't believe in the organization, I shouldn't exercise the equity. And 3 months and a day later, IAC acquired the company for a lot of money, and I missed out on a seven-figure payday. So again, in both instances, if I just had more time to wait and see, I would
Right.
have done better.
Yeah. I love the I mean, you're basically solving the information asymmetry
Yes.
problem, which in some ways I'm so jealous of, and I'm not really jealous, but like, in jest, I'm jealous of the 20 somethings who are starting companies now because the amount of information they have, like when I was starting my first company, we had to figure out like, what are liquidation preferences and
Yeah.
where do we incorporate like all of this information that's just all readily available through. And AngelList started a lot of that, but it's amazing, and you're doing all of that now for the go-to-market community.
Yeah, we're trying to. I mean, and the thing that sometimes people are surprised about, because again, I'm a CEO. I'm not like the softest, cuddliest person, even though I wrote, a book about kindness. But my point is, I think people assume that I'm like a union boss in the sense that I'm just going to advocate for whatever is best for the executive to the detriment of the company. And I really don't do that. And most of the time, in many, many cases, because I provide, I probably do a couple hundred career coaching conversations every year with members and non-members. And most of the time, what I'm actually recommending is deeper alignment with the CEO and the founder and the investors, not CROs that are overly focused on cash comp. They come in and they don't understand that the more you push, you might get 350, 400 base, but there is going to be a target on your back. And the minute that you don't deliver, people remember you were a pain in the ass to negotiate with. People remember that you pushed really hard in cash comp and talked about how great you were. And so the margin for error is much less. And that's why my general principle is alignment. It's not one versus the other. It's if you win, I win. And if you lose, I lose. That's all.
So let's talk about that coaching, because I mean, like, if you add up those numbers, you've coached, thousands of go-to-market executives, directly and, indirectly through Pavilion. What are some of the recurring themes of problems you see and kind of advice you give?
Yeah, I mean, the most common theme is should I stay or should I go? That's like the most common. People are unhappy in their situation or their company. Maybe there was a specific decision that upset them. They got passed over or somebody else was brought in, and the question is, should I quit in a huff? Not always a huff, but or should I stay and stick it out? And to what extent? And again, I don't know if this is surprising or not, but the most common piece of advice I give, and that doesn't mean that there aren't exceptions, and if people are in unsafe workspaces, if they're in a toxic situation, if they were harassed or made to feel uncomfortable, any of that stuff, then obviously I'm going to be supportive for them. But most of the time, I'm advocating that they stick it out, and that's my default. My default piece of advice is stay, which is a little strange, but it's because I just think any group of people is going to be totally messed up, So like any company is going to be messed up. There's not, yes, there are degrees, but you're going to trade one set of problems for another set of problems. If you've been somewhere a long time, you might have institutional knowledge. You might know how to get things done, and that's more valuable than people understand. Now, if the company has a secular problem, meaning like it's just stuck to the point of preferences at a bad valuation and no growth situation, yeah, then I might advocate something else. But generally, my boss made this decision and they didn't consult me, and I'm really angry with everybody. And I gave us some piece of feedback and they didn't listen to it. My general advice is, yeah, that happens. Let's play a longer game than that.
Yeah, I think it was, what is it? I think it was a Ruth Bader Ginsburg quote where she was like, "It's not about, um, getting your points, speaking your point, but it's doing it in a way where you can be understood." So I'm always like, Jeff Weiner had this great phrase at LinkedIn called "Seek first to understand."
Yeah, I remember him saying that. Not just on stage.
Yeah, in those kind of situations, it's like, and I would be the same. Like have been hot-tempered at times in my youth, and even recent. But I think I think that notion of like, okay, so there's a disconnect happening here. Like, let me first understand, was it a failure of communication on my part? Is it something that they don't understand? Like, what is missing here? And sometimes you just have to, as Bezos says, disagree and commit. But I think that's great advice to be like, there's always going to be these setbacks and things that you just need to push through, as long as it's not a totally broken, dysfunctional organization that just has no future.
Yeah. I mean, and the other, of course, the other part of, the other major piece of advice or coaching situations I get is, should I take this job or not? And that's it's, you've done this as longer than I've done it, Doug, and the answer is I have no idea. I mean, do the due diligence. If it seems, but things can change, and sometimes a bad situation becomes a great situation, and sometimes a great situation becomes a bad situation. And there's a checklist that we provide people in Pavilion, and there's a series of questions that we ask. But generally speaking, it's a startup because it's high risk reward, and it's a crapshoot. But try to be helpful.
I have a phrase that I've used. I'm sure I stole it from somebody, but for a long time in my life, of the love or fear test. And anytime I have gone into a job being like, those people seem cool. That seems like an interesting problem. That would be fun to work on. Those have actually been the ones that have worked out the best. And like in a couple times in my career when I'm like, oh, they'll make a quick buck there. Those have been the
It
disasters.
never works. I
Never
love
works.
that. I
Yeah.
mean, I also think, to your point, like, yes, we teach people how to negotiate and, and the Bill of Rights, but the best deals I've done have all been on a handshake,
Yeah.
and I've talked about, and a lot of my current success is due to our mutual friend, Max,
Right.
and getting to know him 10 years ago, and a lot of things flowing from him and I agreeing to launch the Sales Hacker podcast in 2018. So, to your point, the I think that's a great idea. I think I like those people and I want to work on cool shit with those people. That tends to work out pretty well.
Yeah. And like when people come to me asking for career advice, it's always like optimize for learning, not title, compensation, all that stuff, right? And that's also been the thing. Anytime I've been like I just think I'm going to drink from a fire hose, learning in this environment. Again,
I think that's great advice. I think I think that too many people it's like this growth versus fixed mindset thing where too many people try to label the experience too quickly as a success or failure depending on whether there was an outcome, when you have to understand, like, you're building, to your point about optimize for learning, you're building equity in yourself over 2 to 3 decades, and
right.
every failure is a learning opportunity to apply to the next situation. But some people believe that.
The beautiful part about America and Silicon Valley is like, you like and you might have this experience in Europe, but like I've had, my father was from England, and I know a bunch of folks from Europe, and like there's just more of a stigma with failure. And here it's like, especially in Silicon Valley, it's like, what'd you learn? Here's another bag of cash, right?
100 million%, yeah. Just it's the tolerance for failure, and it's which is the related part of encouraging people to be optimistic and to think big, and to say, yeah, you can change the world. You don't know. Maybe it'll be OpenAI. Maybe it'll be Cursor. We don't know.
Yeah. So let's talk a little bit about community building, because Pavilion, you said, is like 10,000 plus members, and there's no traditional marketing, like, and obviously there's lots of people who are kind of jumping on the we should build a community bandwagon right now, but very few who are even anywhere as close to successful as you are. So can you talk a little bit about like what's the secret to building a successful community, and like how does that tie back to real business results?
Well, the community is a very interesting business. Obviously, I've thought a lot about it because I've been doing it a long time. And I would say that I will tell you the secret to building a successful community, but that doesn't mean I embody all of these principles and I've made these mistakes. And I think that there's a fundamental reality. It depends how you structure it, but what I've learned is that there's probably an upper limit on the desired growth rate of a community,
Yeah.
and that's important because the faster you grow the community, the quicker you are, the more likely you are to diminish the quality of the community. And it's like a club that lets in too many people when it's cool at first, and then all of a sudden it loses its luster over a period of years. And so the number one rule of a community, well, the number one rule is understand why you're building it. And hopefully it's not just to sell your software. Hopefully there's a reason that it exists beyond simply, I want people to give me their money so I could start a club. Our reason is pretty straightforward, which is everything I talked about. The world is uncertain. It's incredibly hard to navigate. And we want to be a resource for people to lead better, more fulfilling professional lives. It's pretty straightforward. So then the next thing you need is a clear ICP. And this is, if you were to ask me about the lessons learned and, what did I do well and didn't do well, I think that my eyes were bigger than my stomach. We raised money 4 years ago at a high valuation, and we had this idea. And this is, one of the pieces of advice I give to founders, which is that be wary of the investor that preaches optionality. And so everybody was saying, you can do Pavilion for HR, you can do Pavilion for legal. And we took our eye off the ball a little bit, and it went from a thing that was invite only and very exclusive to a thing where anybody could sign up at any time. And obviously, it can't be an exclusive club if you can just join online. So the nature and tenor of the organization changed over time. And if I could do it again, I would just have stayed laser focused on our ICP, which is, pretty straightforward startup advice, which is just understand who your persona is and don't get distracted by the shiny object. And I think if you can deeply focus on your ICP, there's a reason why you exist and you have a set of values. The roadmap from there is pretty straightforward, which is try to educate people, probably through some kind of content structured in a way that feels like a course. Try to bring people together in formats where they can learn something and share personal experiences, and try to over communicate why you exist all the time. The last thing I would say is, and this is something that we're working on, and again, we haven't done a great job of, is understand the psychology of community and of organizations deeply. And what do I mean by that? We've had a lot of people cancel their Pavilion membership, and it's partially because it's not even the money. It's that they felt like, I was on a call with somebody yesterday and they said, you treat everybody the same whether they're coming or going. And what he meant by that was whether they're early in their career and on their way up the escalator, or they've achieved something special and meaningful, and they are one of the people that we look to for advice and for mentorship. And what he was saying, I think, to interpret it a little bit, is we didn't recognize the people that helped us build Pavilion from the early days, and they didn't get any kind of special status, and they didn't get preferred seating slots at our events. And I think that's something we really need to do a better job of, is honor the people that have contributed, because a lot of community tends to feel like college, and college has a timeline.
Right.
College is time bound. You don't stay there forever, and afterwards, you either you don't want to pay tuition every year to UVA or where Stanford, where I'm sure you went to somewhere great. It's you don't what you want to do is be aligned and affiliated with the organization in such a way that they recognize that you contributed to it. And so that's, I think, understanding the psychology of status has a lot to do with building a great community.
That's really fascinating, because you've talked about, like, you had these kind of hyper growth years from, like, was it like 2020, 22?
It was, yeah, 20 end of 21, 22, and then we hit the tech recession and we were over our skis. We were this like beautiful little bootstrap business, where I'd show you my financials and look at that 30% EBITDA margins while we tripled that year. Isn't that neat? And then I broke a lot of it, and we dramatically expanded the organization. I will say this is true of any organization. And we talk about it all the time, right? But A players hire A players and B players hire C players. You lower the bar for talent for people that come into your organization, and watch out, because the accumulation of mediocre decision making, coupled with some amount of capital that you're pulling from the balance sheet, really can put the business in a difficult position. And so we sort of hit a period of introspection and reflection from 22 to 24, the end of 23 really, and now we're coming out of it, and I'm super excited about the future. There's still a little bit of a question mark around, can a club that was once cool become cool again? And but Coach is a great brand that was popular. Hermes is. I mean, there are brands that renovate, and I think even Soho House is about as cool or cooler than it was like 10 years ago, even though it's a public company at this point. And has a very large membership. So I think there's a way to do it, but it's certainly more difficult from the position that we're in, and that's why we're working on all the things that I talked about.
So what, as you look to the future and you're kind of like thinking about this next phase for Pavilion, what's coming up for you?
So there's a couple things, and some of these are super straightforward and obvious. But again, if there's anybody listening that wants to build a community, these are the lessons learned. So the first is that there is a period at the beginning of Pavilion where you like get Pavilion. You do all the stuff. The first 90 days of Pavilion, if you lean in, are amazing. It's like opening a door to a party you never knew existed. We've got courses that you can take where we explain concepts that you see on LinkedIn but don't really understand. You have access to a global community. It's really pretty awesome, right? And then after about a year or two, you feel like, okay, I've done Pavilion at this point. And so at that point, we need some options for you. And so we're doing this pricing and packaging exercise. And on the high end, and then I guess the other thing I would say is we also want to create spaces where like-minded people can congregate more easily. So what does that mean? That means that we want to build an alumni membership, some version of that, where if you don't want to stay super connected, but you want to give back to the next generation, there's a place for you. We also want to build a higher end membership tier, which we're calling Pavilion Gold, which is only for operators, in-seat operators from 100 million to 3 billion in ARR. And that's, we're doing a dinner in San Francisco next week, doing a dinner here in New York. And I think that's really exciting because there isn't a lot like that. There's been a few things here and there that have cropped up over the years, but there still isn't anything with our size or scale to really recultivate an era of exclusivity. And then the last thing I'll say, and then two more things. The third is we're building, mastermind groups, which again, this is not rocket science. Every membership organization should do this. But the way to make people feel like they're connected on an intimate way to a membership organization is to give them 8 to 10 people that they can meet with regularly, sometimes with a moderator, where they can develop really deep relationships and connections. So we call those small councils. We're rolling those out this fall to the organization, to the membership. And then the last piece of it is just really focusing on our educational content. But I think the fundamental part of it is really meeting members where they're at, meeting people where they're at, and figuring out what do you need at this point in your career, and then giving them a package that matches that. But I think it's really interesting because I've been having some calls with canceled members recently. And I've been saying we're thinking about this alumni membership. It's much cheaper than you were paying. Sometimes it's the same that they were paying because they were an early member. But we call it an alumni membership. And we say one of the criteria is that you have to mentor the next generation. You have to participate in our mentoring program. And it is very interesting that if I hadn't given that distinction, people wouldn't do it. But if they're given a package, this is literally a SKU. But if they're given a SKU that has some kind of like philosophical principle behind it, then they will buy it. And again, I relate that to the point that people want to be seen and recognized. That's the point of it. They just want that special alumni designation. And if you do that, they feel appreciated. And if you treat them like the head of sales, the 24-year-old head of sales at, a seed company that doesn't know anything when they've been working for 25 years, they don't appreciate that.
That's fascinating. I love those journey paths, and I think that we were just hosting a dinner last night, in fact, and to me, uh, one of the things that I've participated in some of your dinners, and it just I don't think those are ever going away, and I think they're becoming more important than ever in this age of like automation and everything happening with AI. Just the face-to-face contact is so key.
I mean, I'm literally, I got a LinkedIn post brewing, but I flew here from Barcelona. I'm here for 2 days and I'm flying right back because I don't want to miss weekends while I've got a little baby girl. And then there's a direct flight on United from Barcelona to San Francisco. So next Monday, I'm flying direct to San Francisco to host one dinner. And what's the point? It's exactly what you're saying. In a world of AI ubiquity, where, to the point of some of the people you're having dinner with, you can't even tell if you're talking to a human or an avatar. In-person experiences are differentiated and they can be incredibly powerful. And you just got to be willing to get on a plane and go see people in person. And it's not even that something good always happens. Usually something great happens.
Yeah.
Something special typically happens. At least one special thing happens when you meet people in person.
And it's many to many. Like, even like we did our dinner last night was maybe like 20 people, but just the level of like connections and reconnections and like let's follow up with it, like it just like in a 2-hour event. It's amazing.
Yeah, and that's why one other random learning, but again, it's like we do all these big events. We do some big events. We sell tickets to these events because we don't really have the margin to just give people the tickets for free. But we also sell sponsorship. Well, here's the problem. I put too much emphasis. I want the events business within Pavilion to break even because we do these big conferences and I don't have the balance sheet to spend, $2 million on something and as a loss leader. So I can't do a bunch of attribution to justify it. I really need to know that like the event pays for itself. But the mix of ticket revenue and sponsorship revenue that you bake into the model, and therefore that is handed out to the sales team or the revenue organization, is really interesting and critical because the more ticket sales you put as a part of the revenue driver, fundamentally, the lower quality of attendees you're going to have. There's going to be a relationship between the percent of revenue that you assume associate with ticket revenue, because you're going to push on it, especially if you really want to break even. Send another email, offer 30% off, early bird specials expiring, offer 50% off. And that is a double whammy where it hurts both the brand and it hurts the sponsorship revenue, because then the sponsors say, who are all these people? They're so diverse. They're not the people I was hoping to talk to. And so where we're ending up is, I think the only thing that's important, to the point of your dinner, to the point of the dinner tomorrow night, the only thing that's important is the people in the room. And if you have the right people in the room, you can pretty much do anything you want. And if you have the wrong people in the room, you can't do anything at all.
Exactly. Right people and a little bit of alcohol.
Exactly. Exactly. Or whatever strikes your
Whatever you
fancy.
want. Yeah.
Yeah,
Yeah.
exactly.
So you mentioned LinkedIn, and let's shift gears and talk about that. I mean, you've talked about spending 400 plus hours building your LinkedIn brand, which is clearly paid off. 115,000 followers or whatever when I checked earlier today. Can you just talk about like what that journey looked like? Like, what's your process? How do you think about what to write, and then how does that tie back to the impact on the business?
So the journey was, 2022, I had, like, I don't know, I would write sometimes, but 2022, this, you might know him. He might be in GTM Fund. Jamal Reimer. Do you know Jamal?
I've heard the name. Yeah, I don't
He
know.
wrote this book called Mega Deal
Okay.
something, about closing like $50 million deals. It's a good book. I really enjoyed it. And so he's a friend of mine, and I get on a Zoom with him in middle of 2022 when the world is going to hell, and he's got a big shit-eating grin on his face. And I said, "Why are you so happy?" And he said, "Because I'm working with my LinkedIn whisperer, and honestly, like, the money's just the money's pouring in." And so I said, "Your LinkedIn whisperer, like, he writes stuff for you?" He says, "No, he doesn't write anything for me. He edits things." And so this is Alec Paul. This is Andy Paul's son. And so I said, well, let me get some of that. So I started working with Alec in the summer of 2022, so about 3 years ago, and we just went through a process. So what's the process? It's really like a messaging or market. It's any marketing exercise you would do for a startup or for any company, which is, okay, let's start with, why are you here? Why do you exist? Who are you for? Who are you against? And it's because, as much as I have great music taste and, I'm a really interesting person and I have thoughts on running and, how to get through an airport quickly and why global entry is amazing, like, people have a point of view on what they want to hear from me about. And I need to sort of lean into a niche. And so at the time, and still roughly, it was a process of deciding who you're for and who you're against, and building a messaging architecture, writing down themes that you want to talk about. What do you want to be known for? So my answers to that were, I want to be known for building smart companies. I want to be known for empowering executives and helping them negotiate. And I want to be known for, thoughtful, practical advice on building high growth but efficient companies. And so and I started to write about those things. Now, I also, you layer in a little bit of authenticity and vulnerability. And of course, my career hasn't been up and to the right for the most part. It's been a lot of stops and starts and getting fired. And so I really wanted to share with people that there can be a journey to the point of everything we talked about, to Silicon Valley and the American way, that that can include many things that you would think of as failures, but that can ultimately lead you towards wisdom, experience, and hopefully success. And so I started writing about those things. At first, it was twice a day,
Oh,
which is a lot, during the weekdays, and then once a day on the weekend. And this was, you haven't been there for a while, but I think the product managers on the feed were a little bit more enthusiastic at that point. And there weren't that many content creators. And
oh,
so it started to gain a lot of traction. And of course, you build an audience and, you can sell them things. And part of what I was obviously selling, and I don't mean this in a cynical way, I just mean, like, I built a company based on my values. So obviously, if you like my values, you're going to probably like my company. And it grew and grew over time, and it's become a critical part of, how people experience and interact with Pavilion. And I think, and now, recently, meaning very recently, like over the last month or two, the PMs at LinkedIn are always, they're messing, with the algorithm all the time. They're trying to figure out, like, what are they trying to get? And their existential journey impacts the rest of us as creators. So everybody's complaining recently that the organic reach is down. And you sort of feel, like you've invested all this time to get to 115,000 followers. But honestly, Doug, most of the time I have no ability to reach those 115,000 people. I will write something and it does not get, I don't know, the word follower is notional at this point. But nevertheless, I got here. And I think it's almost like if you were U2 or Coldplay before Napster and before Spotify, like it was easier. It's easier to become a mega brand in terms of limited distribution with fewer content providers than in a world where there's infinite content creators and, platforms like LinkedIn where everybody's competing. And so I got to 115,000 followers. I think it's much harder today, meaning unless they change things, to get to 115,000 followers today than it was a couple of years ago. But the benefit is very, very meaningful. And, especially with AI, and I don't want to give away, too much of the secret sauce, but there are so many things that you can do connecting Clay and data enrichment platforms that take signals from LinkedIn and translate that and enrich the data so that you can find people's contact information if you want to. And you can slowly build an audience that you control, not LinkedIn. And the ability in a world of AI and offshore support for an individual brand, meaning a person, to build a big business is greater today than it's ever been. Because the usual, and I just wrote about this, like the usual piece of feedback that you get is, well, how can you ever sell Pavilion if everybody equates Sam Jacobs to Pavilion? Then what are people buying? And the minute that Sam Jacobs leaves, nobody will want to do anything with Pavilion. At the same time that people are saying, someday soon, somebody's going to build a $1 billion AI business with just one employee. I think that we have to rethink the economics of personal brand in a world where your persona can be replicated so easily through chatbots, through avatars, through different kinds of emails that look and feel like you. And I think the scope and sweep of one person's point of view is never been more powerful, particularly in a world where there's so much banality around content, where people want and desire to connect with authentic personal brands. So, Pavilion is Pavilion, but Adam Robinson, I mean, he publishes the numbers. Our B2B plus retention.com is like close to a $30 million business, fundamentally built on his brand because it's commodity tech at this point. So sort of a hot take, but I think there's way more actually to be done when it comes to personal brand development. And so I'll tell you to the point of, the other thing in my bio is co-host the Top Line. We're spinning that out as a separate company, uh, because distribution can be a moat because of what I said, right? LinkedIn changes the algorithm. It's way harder to get 115,000 followers today than it was yesterday. That's a differentiator for me. And somebody was saying, I think Harry Stebbings was saying it too, it's way easier to build a media company and then a fund than a fund and then a media company. Distribution is king in a world where everything is ubiquitous.
So let's talk a little bit about the podcast. How long you've been doing it, and kind of what are some of your secrets to developing a good podcast? Because I'm new to this game. This is like you're
I
like
think you're doing a great job.
thank.
Um, we follow, so it's, we started doing it during the SVB crisis.
Okay.
Was that 23 or 22?
I want to say
We're on
23.
episode 115, so it's probably 23. Yeah.
Yeah.
Um, well, one secret is rapport. So I do it, it's kind of like a smartless, all in,
Oh.
it's not just a standard interview format. It's me, AJ Bruno, the CEO Quotapath, and Asid Zaman, the CEO Sales Talent Agency. And I think we just have we're three very different people. And I think we have a very good, give and take repartee. And I think that matters a lot because people feel like they're listening to a couple of friends bullshit over some beers and and club soda or whatever it is that people drink. So I think that intimacy and the feeling of being connected to some private conversation, I think, is quite important. And then I think it's about consistency. We haven't missed a week in 2+ years, and I think that's hard. And you just have to play a very long game and say we are not going to miss a week. And then I do, I think it's, do you have something interesting to say? If you don't, it's not going to be great. And if you do, there's always, there's this funny sort of uh, line of thinking, which is, does the world really need another podcast? It's like saying, Does the world really need another restaurant? Probably not, but
Love it.
people are starting great restaurants
Yep.
all the time. Does the world need another book? We got lots of books. Why is anybody writing a book? It's like because there's still interesting voices out there.
Yep.
And if you just say something interesting consistently for a long enough period of time, somebody will find you.
So, speaking of the book, what would be like, some of the, what are two key takeaways
From writing the book or from the book itself?
in the book itself? Yeah.
Well, the book itself, so the title is Kind Folks Finish First, The Considerate Path to Success in Business and Life. And I would say one of the key insights is it's very easy to be kind in a zero interest rate environment.
Yeah.
So
Yeah.
that's the subheader. um, I think the main listen, the honest truth is that the main takeaway is pretty straightforward stuff on being a good person, which is these are the values of Pavilion, and I truly do believe these things. So what are they? Play a long game, not a short game. Your time horizon can be a competitive differentiator, and too many people are transactional, and you don't understand that it's not you're not a sucker for playing a relationship-based, very long game. It's a unique differentiator. The point of the book fundamentally is people think giving of their time, mentorship, taking a phone call on a Sunday when somebody's going through a difficult period, all those coaching calls they do. Sometimes people think that doing good is a detour from from the path of their professional success. And my point is, I'm trying to reach the more cynical people when I give you this following example. If you remember The Godfather, the beginning of the movie, it's his daughter's wedding, and there's a bunch of people lined up because you're not allowed to say no on your daughter's wedding. And what's the point? And when, especially in Godfather 2, when they show like the origins of Vito Corleone, the point is what he did was go around and help people. Now I know, with sometimes violence and sometimes protecting people, but fundamentally the point of the mob is I do you a bunch of favors and I accumulate a bunch of and power and influence can be construed as that person can help me. And so if you go around helping people, you accumulate power and influence. And that's fundamentally like the point of the book, which is you don't have to I think you should be a good person, but doing good things accretes value to you over time that you can then use to do something like build a business like Pavilion.
I love that description because I think that like when people hear stuff of like, be a kind leader, they think it's this like California hippy dippy shit, and and maybe even a liability at
Yeah.
some things. And I've always felt like focusing on the people that I'm bringing, as you said, like it's all about the people, right? And I think that if you realize this is a marathon, not a sprint, you don't have to be an asshole, right, to be a successful leader. And I think there's people I've seen or mentored who are just like, oh well, Steve Jobs did this or Elon Musk did this, and like that's what you just have to be a dick to be successful, and it's just not the case.
I mean, because I've had this debate with people, and sometimes people say, like, well, look at the billionaires, and I'm like, all right, so maybe maybe to be a billionaire you have to be a dick,
Yeah.
but to be a centimillionaire you don't, and that's
Okay.
pretty good.
Yeah, and I'm fine with that. Yeah. Well, just our VCs won't listen to this. We need to be billionaires. Trust us. We're going for
Right,
the billionaires.
exactly. Sorry,
We're
sorry,
doing it. We're
sorry,
doing
sorry.
it.
Trillionaire. To be a
Trillionaire.
trillionaire.
Trillionaire. Yes. 500x return on your investment. So let's just shift to a couple of personal questions as we wrap up here. So
Sure.
like you moved to Barcelona. I like what do you like to do for fun outside of Pavilion?
Well, I live a pretty boring life. As you mentioned at the top of the show, we have a 4-month-old baby girl, and so what do I do for fun? First of all, I like being with the family. So I hang out at home and play with the baby, and I live in a beautiful town, and it's beautiful weather, and so I like to. I hate to sound so boring, but I like to go for a run. I like to run down to the beach and go for a swim. I like to eat really good food, and I like to read books, and I like to, hang out with my partner and and just live life. And I think I found a lot of joy in just I'm a fairly domestic person. I will say, like, the most fun thing that's happened recently is that I did spend a good number of months working with this guy who his moniker is the dance floor architect, and he lives in Ibiza.
Yeah.
And he came over from Ibiza to Barcelona on the ferry, and he helped hook up a new record player, like a vinyl LP record player. And so, one
Nice.
thing I like to do is listen to really, really good music on vinyl.
All right. All right. Well, the next question was like, what would be something we'd be surprised to know about you? That might have covered it, but is there something else that
Oh, I think there's more. So I started a record label when I was in
wow,
college, and then I felt like the musicians I was working with weren't good enough, and so I started writing and recording my own music. And so I have a bunch of music on Spotify that I will say. Here's how I describe myself. I am the best that guy in the office is in a band. I'm like top tier of that kind of person. Like, we should go see the guy in the mailroom. He's in a band. We should go see it. He's playing tonight at Rockwood. It's pretty good for that.
all right. Are you playing out in Barcelona?
I am not. I am
Okay.
not.
All right. All right. Because I want to come see you sometime. Yeah.
Well, look me up the band is called The Flying Change, and it's on Spotify.
Okay. Flying Change. Everybody go check it out on Spotify.
Please.
Followers, we want right up there with Coldplay and the Flying Change. Weekly
Exactly.
listeners, right?
Exactly.
Um, what's like, I love geeking out on products, but like, what's a product that you use personally and love?
I I hate to, I listen. I do. I'm one of those people that uses ChatGPT
Yeah.
every day, and I love hooking it up to different sources and figuring out what happens when you do that.
Mhm.
So I do like Otter. I know there's a million different call recording companies out there, but I find it very useful. And then in the world of other brands, I will say that Yeti is something is a great
Yeah.
business that I'm really they build these great koozies and cup holders and coolers, and I like what they do. I like their work.
Yeah. High quality. Just out of curiosity, like what kind of questions are you asking of your Otter transcripts?
All right, so here's what I did, right? I missed the ELT today.
Right.
So, because I was on a plane. So I exported the transcript from Otter and I uploaded it into ChatGPT. And the prompt was, this is a transcript from today's ELT meeting. Please compare everyone's contributions against your understanding of our goal and strategy. Rank each participant based on the quality of their contributions, the alignment with your understanding of our strategy, and their overall value. Look for people that offer commentary that sounds nice but isn't aligned with what we're trying to do. Also, look for people that pull the conversation in the wrong direction. Finally, evaluate the overall quality of the discussion, et cetera, et cetera. So I have now a ranking of each of my ELT team members.
That's fantastic. I love it. Yeah, I mean, we're doing obviously a ton of AI stuff built into Coffee, and we have the built-in recorder, and we just realized like we can have some generic stuff out of the box that works really well, like for summarizing things or prepping follow-up emails and stuff like that. But we just realized like the best thing to do is just give people, their own prompt engine. Like this is what I like. This is kind of the information I need to brief, for a meeting, or this is the kind of information I want in a summary, or this is my style of a follow-up email. And just like the tailoring of that stuff is so key to be able to do it. And it's amazing what comes back.
Yeah, I'm somewhat right now fixated. I think a lot about it. I don't my thoughts aren't perfectly formed, but data is on my mind.
Uh-huh.
And particularly because if you run a community like Pavilion, theoretically, you have some walled garden of unique insights
Yep.
that are probably not being scraped by the LLMs.
Yep.
And that could be, if you train the model in the right way, could be a very interesting specialized data set that isn't possible anywhere else. And so I'm really interested. So I don't think I can do it for this dinner, but I really do want to, I'm building this elite membership tier of very high quality operators, all of whom have been pre-qualified because they're running multi-hundred-million-dollar businesses. What I really want to do is just like record everything that they say and all of the different community interactions in a separate GPT, and then use that to build some kind of new corporate executive style research body that is basically the summary of only high quality participant conversations.
I love it. Yeah, we have a phrase at Coffee: you can't have good AI with bad data, and so it all starts with the data. And you've
It
got
really does, and you have to think about, and then the world is starved for data, and that leads to some. I mean, that's why I think Zuckbot gave $15 billion to that kid.
yeah, 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 it's a pretty good deal. Yeah.
Exactly.
So finally, just how can our listeners stay in touch with you and help you on Pavilion's mission?
Follow me on LinkedIn, Sam, linkedin.com/the word in/Sam F. Jacobs. Subscribe to Topline. It's really good. And we also have a newsletter. And if that isn't enough for you, then come on in and join Pavilion. The pool is Luke.
Sam, I love talking to you. This has been a great conversation.
Thanks for having me, Doug.